Hello, everyone. Hi, Sinatra. Richard Adams, nice to meet you. Hugo, how are you? Brock, how are you, buddy? Sunil, nice to meet you. And Alexander, how's everyone going? Kind of a quiet session again today. Interest rates did follow through in yesterday's trade. We have the 10-year up again. So pretty nice move off the 113, little double bottom here, approaching resistance. I think that this is setting up a wave to where we're going to take out the 178 high up here and trade at the 2% level. I think that is part of why gold sold off the day before, not yesterday, was because of what's going to happen with rates. Actually, I heard something that the IMF had a huge SDR deal happen yesterday. 650 billion. Hello, Ann. Tom Stapleford. Not that they were behind the selling of gold, but some type of linkage between an SDR and the gold sell-off. So you guys could check it out. I hear a lot of things, and some of them are accurate, some are not. Anyway, when you look at the gold market and silver market, it's like being in an auto wreck. So the market's in a little bit of shock now. Hi, Monica. And I would let it fill out this range and see what it does. I wouldn't just jump on it here. And, in fact, it does, even though we could rally, kind of makes perhaps we're going to go for these stops in silver here. We took out this. I believe that we were going to do that. Okay, so that's happened. The only other place I could sell stops are here. Gold, I mean, you could almost lower this to a huge descending triangle of 1680. That's going to take it way down there. But I don't know why we couldn't see it under 1600 before it's all done. Japanese yen following through as well, higher yields, higher USD yen. Perhaps we get this 1, 2, and then a 3 up here for a pause in yields, the yen, and maybe some relief bounces in precious metals. Stock indexes keep grinding up. I do think that when you look at this, whether or not we're going to 15,350, like some people are saying, another couple hundred points in NASDAQ, you have to say that there's an awful lot of non-confirmations happening here. And this is the first one that we had last week was under 70. So, that's a pretty negative, glaring divergence. Not that it's mattered for 20 years, but sometimes it does. Also a rising wedge. So we'll see what happens there. Canada, trying to get through resistance. I still think there's a chance to buy Canada lower. I mean, it didn't make that much hay on this recent sell-off in oil. And oil got clipped pretty good back to the support. Here's another descending triangle, right? So they're starting to pop up everywhere. This is going to take crude back down to 50 if we break down 77, $13 range, 51 or so if we break down. So maybe we get a rally back. But next time through this support level, I don't see anything till 59, and it actually measures lower than that. Okay. So Ryan, any follow through or comments on what I've been saying here this morning? Hello, Tom Stapleford. What do you think?
Yeah. Hi, Dale.
Hey, buddy.
Good. Just a bit of a continuation, really. We've got yields bouncing up. 10s are up at 132 at the moment, and the yen's grinding up behind it. It has these moments where it just grinds, Dolly, and it just it doesn't move, it just keeps going. You can't you can't get a move to get into. It doesn't retrace. It just goes and goes. But on the wider picture, once we get up to sort of 110, 70, 80, that's when the levels start kicking in. We're closing on that 111 again, that we haven't managed to get above and stay above. If we manage to do that on the back of yields, then we're potentially going to get a kick on to 112. On the other side, euro dollar still looking very weak. It couldn't bounce at all yesterday, and subsequently, as we said, if it's not going to go through 117.70, it's going to go through 117.40, and thus it's done. And we're down there now. Next level, what I've got down here is the old March lows at 17.04. We've also got a fib there of that 2020 swing up at 16.95.
Okay.
So that's, I've actually just dropped some bids in there for a scout play of the big figure. We've got some option barriers down there as well. So there's a bit of support down there, for at least on a technical basis. But if yields blow up to sort of 134, 135, the level's not going to stand up to it.
Yeah. So
probably.
Would you advise people just to lower their expectations in this time period in August? Lower than they were before for, ATRs are shrinking, etc.
Yeah, exactly. It's difficult because it's a quiet summer month, obviously, but we're still getting moves in things like yields, and that's, if they weren't moving, we'd all be talking about, who's going to look sexiest on the beach.
Did you hear anything about the IMF, Ryan? That they, I don't know, have some SDR offering that was their largest ever. And that perhaps, they did some gold selling yesterday to finance it.
Is that what the finger's being pointed? Is it at that gold move?
That's one story I've heard. There'll be a
ton of us.
There'll be a lot of stories out there.
Yeah, we'll get the truth in a week's time when it means nothing.
I think it was Gordon Gecko did it from the beach on the Hamptons. He shorted a bunch of gold, and then he called Bud Fox up and said, "This is your wake-up call."
Yeah.
Remember that one?
Yeah.
Okay.
But, we just, we're getting moves. They're a bit slow going. Euro sterling is another one. We're just edging down now. We seem to have finally
cleaned out cleaned out those stops.
Yeah, I'm a bit disappointed. I'm still not on. I didn't add to shorts there. I had it right every which way, and I just missed my chances and was too cautious and whatever. But I'm still core short, so this is fine by me. It's another pair we've got barriers in at 84.50 and 84.00. I wouldn't be too worried about the 84.50 ones. They tend to be smaller than at the big figures. But yeah, the moves are there. I think we're seeing this morning a bit of rate divergence play because we've seen yen crosses rallying as yields have gone up, but cables maintained a bid while euro sterling's fallen. So again, you're looking at while euro dollar's fallen, cables remained bid. So obviously euro sterling is where the action's happening now. So again, Aussie dollar's up even while US dollar's up. So I think there's a bit of rate divergence trading going on here, as well as a tad a bit of risk on, if you like.
Okay, thanks for your insight.
Oh, what do you know, guys? Right, euro sterling is heading towards 83 handle. Somebody called that a while ago.
For 3 years, and somebody called the $100 break in gold too last week.
Yeah, that's lucky.
Said you wouldn't be surprised if it broke $100.
I didn't expect it to happen in one day.
Happened in 2.
But we'll take it nonetheless.
Yeah.
Yes.
So what are you doing here with the metals? You're just going to let these ranges kind of fill out still? I kind of describe it as like an auto wreck, and the market's in a little bit of shock, and you just let it, develop in here, some kind of pattern.
Yeah, I mean the move has been pretty impressive, and the sheer violence of it makes me not want to do anything right now. I have some relatively clear targets as to where I want to get long. Gold is there's a big zone around 1680, 1690-ish, which it touched on that big crash. And it's funny because I had mentioned this level a few days ago. I said,
Down
look, if
here.
it gets there, if it gets there, I really want to buy. And I mean, it got there for what was it, a few minutes, and then it bounced back. Silver also. I used to say I want to see a 23 handle. I haven't done anything because of the way it's got there. I really think we're going to get now to the support zone, which is around just over 22, 22.20. I think I want to start buying. So, I was saying some levels, but as with everything, you have to adapt to how the market's going. And the price action is making me a little bit more cautious. So I'm just going to wait a little bit longer. And those are the two levels where I want to add. To my longs, and then obviously I reconsider afterwards. And
look how well the junior silver miners are holding up compared to what silver did yesterday. Okay, not bad.
Yeah,
I mean, it was down, but really not terrible. I mean, we're at 38% back of this whole move. So
yeah, I mean that drop in the COVID drop was ridiculous. I missed it.
Here.
I missed it completely. I mean, that was the buy of the century. But
well, maybe
anyway.
If silver's not doing anything great to the upside, and some century we get some type of risk off, might be able to buy these miners cheap at 61.8 or 78.6. These
maybe
juniors.
Yes,
that's what I'd like to do.
Maybe, absolutely. But the at the moment, it's still all about the dollar, and equities don't care. Taper, no taper. They're steady as a rock. Yields the same. Obviously we're going a little bit higher, but we're 15, 16 base points from the lows in 10-year US. But still, if you zoom back a few weeks, we're still in a relatively well-defined range. And I still don't trust them. I want to see a proper breakout in yields. And when I say proper, I mean, well above 150. I think we should be pushing 2%. If that happens, then I think that's when stocks are going to notice.
Okay, well, I think that's going to happen. Oh, anyway,
morning.
Go ahead, Blake.
Hey, good morning, guys. No, I just wanted to make a point that Ryan had pointed out earlier, just a little bit ago, that that we're seeing some rate divergence. If you look at the shorter end of the curve, lower duration yields are actually rallying right now. So what does that typically tell you guys?
Are you asking us? Yeah.
Yeah, go ahead. Ryan. I was asking you guys, do you have any opinion there?
Yeah, I mean, the expectations are coming on
Sorry, Blake.
what the Fed's going to do. I mean, we've had 3 more speakers reaffirming their taper talk yesterday evening. Rosengren, Barkin, and Bostic. We've got Evans out today. He's another one. And the talk that Mester's out as well. There's more people, more Fed heads talking about a taper who are actually voters than there are not. So we've really only got Powell, Brainard, and Williams, who are still in the last speeches were in the not ready to taper yet. So they're outnumbered, and the market's taking notice of that.
All right, and still, I didn't mean to step into that conversation that you were having. But I wanted to mention that, Ryan had talked a little bit earlier about like the divergence between some of the yields and some of these yen pairs too, because we do have a pop in the yen pairs. We have like the euro yen has rallied off of what I think is like triangle support. But in all actuality, like you take like the euro yen, for example, we've been in this descending channel. And if you haven't seen this and you've been, getting kind of stuck on the long side, you're probably wondering, oh my gosh, why does it keep getting slammed down? It's because we're in this, descending channel. But anyway, what else had you say? And I didn't want to interrupt there. I just wanted to,
no problem. I was just repeating what I've been saying for a while, and I know I get boring sometimes, but I tend to look at things from a few steps back. And for me, unfortunately, it was still in the same situation as we were weeks and months ago. And yes, the Fed is talking about tapering, but they're also talking about inflation coming back down. So the markets are kind of thinking that, yes, we might taper, by how much is a question, and what's the schedule going to be like and all that. But overall, the market seems to think that there's going to be a return to normality being what we've had over the past few years, outside of COVID, that big shock, which is in effect bullish equities. With yields this low and inflation low, everybody wants to take risk. We've said this so many times. So that's what the market's thinking. I disagree with that. I think that we will see higher yields. The question is when. How do you time this? That's a big question.
Yeah. So hey, you guys, we saw the move in gold yesterday, and over the last couple of days. We talked about it pretty extensively yesterday, and this is I want to talk about this because it was an important topic of conversation in the Forex Analytics chat rooms yesterday. So one of the benefits and one of the things that I've kind of learned, I want to say, over the years, being I guess on Twitter and being on, I was a very early adopter of Twitter. I started tweeting maybe about 12, 13 years ago. And if you follow me on Twitter, I've done like 70 or 80,000 tweets or something. And, managed to get quite a following of people. But the people that follow me, a lot of them are retail traders. So I use it to gauge opinions and positioning in the market a lot. So when I have a lot of people that yesterday were asking me, and a lot of them I could tell, I'm going to say this kind of carefully. A lot of them I can tell weren't normal people that I'd interact with on Twitter. Okay. They were just random people from all over the world. Be like, hey, you buying gold here? What do you think about gold long? I had a multitude of people reaching out to me yesterday, a ridiculous amount. You know what that told me? Retail was
the move is not over.
It's not over. Retail was buying the dip yesterday. And I told everybody in the chat room, I'm like, look, while we're below 1750, there is zero reason to be long right now. And everybody's buying it. Everybody's trying to buy it. And lo and behold, yesterday we were right about here when I'm getting all these like questions about gold, all this area right around here. And I could tell everybody was out there buying yesterday, all retail. Now, I'm not saying that we can't bounce, but when I get random people, it's like I said, it's not people that I'm normally associating with or talking to, or, and it's another thing when I get like professional traders that I've traded with over the years, that I've worked with, that I've talked to, that, when they start reaching out, that's a different mindset or a different approach that I'll come to when I have like guys and gals that I've known for years, and I know what their skill levels are. I know what they look for. They start reaching out to me. It's a completely different ballgame. But when I got random people, like I said, people I've never heard from or I've ever heard of, and they start reaching out asking if gold's bottoming, I'm like, well, nope, it's not. And so I don't know if this move is over yet in the precious metals. They are still trading heavy, and I have to imagine there are a lot of people that want to buy
stock. People still stuck long.
Either that or they're trying to get long right now. They've been buying it probably over the last 24 hours, saying that this move's over. They waited for it to bottom, and then they're getting long.
Yeah.
I interviewed Peter Bookvar yesterday, and he's a really he's a gold bull, like big time.
Yeah.
And I mentioned in the on our interview, I'm a gold bull too, but I didn't tell him what time frame. I'm definitely not a gold bull right at this moment. From a more near-term perspective, I've been buying precious metals since after Stelios told me to. Just kidding. But
well, that's what I'm saying. You know, if people were going in there buying physical on a day like that, nothing wrong with it. You know, but if you're leveraging things, it's a different story.
Yeah. I mean, I've been buying, you know, physical since gold was at 1100, or, you know, I think it was 1100, 1120, something like that. One, you know, just over 1100, and silver was at $12 or something like that. And I've, you know, been just trying to sock away some precious metals because, you know, I figured this is, you know, starting 5 or 6 years ago, and you guys have been listening in long enough. You know that, but you know, near term, I look at these precious metals, and you know, I'm surprised silver has come down towards channel support, but I wouldn't be surprised if we trade, you know, actually closer to 20, and I wouldn't be surprised if gold, you know, trades down towards 1600 in the days and weeks ahead. So anyway, just some food for thought, guys. I mean, I think a lot of people are trying to buy precious metals out here. Ryan, have you gotten any feelers out there on precious metals and these moves that we've seen?
No, I mean, it's, you know, after the knockout yesterday, they've been fairly subdued given what's going on elsewhere. I mean, you know, again, pointing to the moving yields that we've seen. You know, that's going to keep them on the soft side, like you say. You know, I was looking, when you get big moves like that, you want to see where the levels develop. And I was expecting the support to come in around that 30, 33 area. And yesterday we didn't hold there. We went down, and, you know, the support area is now looking around the 23, 24 mark, maybe 25. So on the short-term picture, it's all about seeing where levels are developing. So at the moment, the range is, as you say, 1750 on top, down to 1725 on the downside. And if we're going to make a move, you're going to break one of those areas and take it from there. But in terms of you know, the mood, I think as you guys have said, there's a few trap longs in there, and if they didn't get washed out in that flood, then they're trapped, you know, buying into 1740s, 1750s, trying to catch the bounce. And if it's not happening, then we could see another exiting of those longs, and we get a shove lower, you know, down towards that 1700 mark, maybe even worse.
Yeah. And I think I would agree with you. I mean, you say 1700 level, even worse. I'm looking at an AB equals CD move that could, you know, take us towards these lows. And I have to say, and I tried to make this point yesterday when I was talking to Peter Bookvar, is, you know, just gold hasn't acted well in this environment. And, you know, I mean, and I asked him what he made of that, and he's like, well, you know, his argument was, well, you know, if you look at what gold's done over the last several years, and we are only just 400 points off of all-time highs. And, you know, that's a good point. I mean, you have to, you know, accept the fact that gold isn't too far off its all-time highs. However, as in you know, all of 2021, we've been drifting lower in gold, despite inflationary pressures are really building. Speaking of which, we have CPI tomorrow. So with CPI tomorrow and producer prices, I believe on Thursday. Let me double check that if I'm not mistaken. Yeah, producer prices on Thursday. Guys, what are we looking for going into this week with CPI? I mean, if you look at CPI readings, I'll take us over to Forex Analytics really quick. Let's go over to the calendar. Let's go to the investing.com calendar just so we can get a visual on this. Where is the CPI data? I just skip it. It is there. There it is, CPI. So if you look at month over month CPI data, here's a good chart. And let's move this over. Okay, this will probably give you a good visual, right? And you can see what CPI has done, you know, basically this year. Okay. So if that visually will show you, you know, what CPI is doing. What do we expect coming out of tomorrow? Stelios, Steve, I don't even know if Steve's here. Stelios and Ryan and Dale. Steve, if you are here.
I am here, of course.
Oh,
no.
Hi, Steve.
Take cover. Go, run away.
All right, everybody turn off your mics. Go ahead. So no, what are we looking for? I mean, we got CPI coming in tomorrow. Is it going to be, I mean, look, we don't have to say, oh, they're just, the Fed doesn't look at CPI correctly, or they're not looking at inflation correctly. Screw that argument. What's the number going to be tomorrow, and how's the market going to react? What do you guys think? Ryan, let's start with you.
Yeah, okay, I'll jump in.
Yeah,
I mean, the market's expecting it to drop a pip in the main headline number on the yearly to 5.3% from 5.4. On the core, it's expected down 2 pips to 4.3%. That given how inflation's flapping around at the moment, 2 pip moves in inflation expectations are tiny. We could be looking at a 5 pip swing again, and it's twofold. From a fundamental perspective, I'm not expecting inflation to suddenly top out, and this is the end of it, and we get a down move tomorrow, and that's it, and the Fed's right, and we sail off into sunset. Inflation lags what's happening in the real world, and I think there's still plenty that's feeding in. We may have seen the spikes in commodities and lumber and all that sort of stuff, which will come and go quickly, but the rest of it is still in there. There's still transport issues, so on and so forth. But the other side is the trading aspect, which is what we're looking at. And for me as a trader, I want to know where the risk is. I want to know what is the bigger risk to inflation at the moment, to my trading. Is it inflation continuing to rise, or is it suddenly going into reverse? Because the market is now, as we've seen, it's on the taper. The Fed heads are on the taper. Yeah, we're tapering. They're already talking about rates, and when into 2022 they're going to start hiking. So the market is looking forward. It's looking at hawkish monetary policy. If we see inflation take 2 monthly drops, let's say it drops 4 pips tomorrow, another 4 pips the month after, everyone's going to go, whoa, hang on a minute. Maybe the Fed are right. Maybe this is transitory. Maybe this is the top of inflation. Maybe the Fed aren't going to be as hawkish now. And so that's going to be the bigger price risk, because everyone's leaning hawkish. If something turns around that's going to make it dovish, then you're going to see yields crumbling again. You're going to see the dollar crumbling again, and we get the big moves out of it. But for the exact data itself, I'm 2 ways. I can just as easily see it going up 2, 3, 4 pips as I can see it dropping back 2, 3, 4 pips. Because there's just that much volatility in the numbers.
Yeah, well, and I think a lot of these commodity pressures are fueling that as well, as you pointed out. Hey, Steve, we hadn't heard from you this morning, but before we go on to Dale's interview, you have any opinions on what we should expect out of tomorrow's number?
I definitely can't guess what the number is going to be. What I know is the facts, though, and the facts are that the vast majority of the month so far, we've had inflation print higher than the highest expectations among the people that are being polled about it. We know that if we keep following the pace of inflation we've had so far in the half year that has already passed, for which we have data, we're looking at an annual inflation of around 7.5%. And I know that in order for this number to become just a lot outside the targeted range of the Fed, just a lot, we need to start seeing 0 to negative inflation for the rest of the year. Anybody that believes this is an actual possibility can raise their hands. And if you do, please call me afterwards, because I have a wonderful burnt bridge to sell you in Greece.
Yeah. All right. There we go. There's Steve with the punchline. All right. Very good, Steve. Hey, real quick, guys, just want to point out the euro dollar is flirting with some pretty key support here. The 117 level, as we get close to it, I mean, this is the chart of the day yesterday, but just horizontal support, 127% extension. I've got to imagine stops are building below 117. I mean, and as a trader, I don't want to be the guy that just starts selling 117.20 and says, hey, I'm expecting it to break lower. So, I don't want to be that guy. But how many people that are long the dollar you know, the euro dollar right now, you know, short dollars, you know, they might be long the euro from higher prices and are just looking at this going, man, we need to start tightening our stops. And my 2 cents is if we break through 117, there could be some pretty big stops below there. I just wanted to point that out before we go. So hey, I want to mention, if you guys haven't, you know, if you want to join the Forex Analytics community, and here's you can see in our chat room, you know, and then here's the Forex Flow Live. They talk about a lot of macro ideas in there. You know, you have our trades room where you're, you know, talking about, you know, what people are trading, you know, there's entries and exits, you know, some analysis and research. Make sure you jump in our chat rooms. They're pretty busy, and download the mobile app when you try out Forex Analytics, because then you might understand why I'm, you know, picking off some shorts in the Aussie yen up at these levels, if you are, you know, inside the community. So I'll see you guys on the Forex Analytics only morning edge in 45 minutes. So Dale, it's all yours.
Thanks, Blake.
And thanks, guys.
Thank you.
Cheers, guys.
Bye.
Good hunting,
See ya.
everyone. Hello, Dave. Welcome back.
Hi, Dale. How are you?
Good, buddy. How have you been?
Doing okay.
All right. Do you want to share your screen, or you want me to?
Why don't you do it?
Okay. All right. So everything seems to be moving according to the plan that you discussed last time you were on. Maybe a few detours.
Yeah, for sure.
And what are the detours? Like precious metals under pressure? Does that doesn't change anything as far as your, you know,
Yeah,
everything's.
That's pretty much the detour. Everything else seems to be mostly on track. You know, the currencies are taking their time, but yeah, I think it's the precious metals that, you know, on Twitter every day I get beat up on, because I remain with my targets of 2,500 for gold and probably 50 for silver, 45 to 50.
Okay.
So obviously it's going the opposite direction lately, but I don't see anything here to change my mind.
Okay. So Dave, let me ask you, have any of the numbers like the NFP last week, or we're going to have some inflation numbers, move up the timetable for when you think that Powell will act and tighten, tighten, whatever he's going to do?
Yeah, keep in mind, my forecast has been all along, I've been ahead of everybody else on the street in terms of saying we could see the Fed tightening by the end of the year, not tapering, tightening. So,
okay, big difference.
I'm not, you know, that's not anywhere. I don't think there's anybody on the street saying that. So that I've been saying that for months, and I still think that's possible. You know, they may go taper to tightening, but my whole forecast says that the second half of this year, we were going to see, after a pause in the summer, we were going to see a reacceleration of the inflation, not only inflation, but inflation expectations, and the reacceleration of the economy. And as you know, the narrative right now is that the economy has seen its you know, its peak in terms of momentum, and that inflation's still high. You know, there's a lot of talk about stagflation, so-called.
Right.
So I don't think that's, you know, you were there too, having been through the period when stagflation was the term stagflation was invented, which was, you know, the early 1980s. Stagflation was invented because we had a 2-year period where we went into recession, came out of it for 6 months and went back into it, and basically had no growth from 1980 to 1983, or from late 80 to 83. And we had inflation, you know, move up close to 20%. That's stagflation. What I see people throwing around the term stagflation for today is a period when you know, the economy slows back down to 2 or 3% or 4%, and inflation moves up to, you know, 4% or something. So that's not stagflation. You know, stagflation is when you have no growth, not lower growth than we expected. And yes, it's, it feels like the reopening kind of stalled this summer, but hey, go through the last 48 years I've been through. Economies ebb and flow through every cycle, and in every cycle, the minute they start ebbing, you have calls for, the economic recovery is over. So all I see this as is more of that, where people react to short-term, periods of ebbing as
Right.
if that's the beginning of the new trend.
Okay, well, I'm showing the 10-year yield right here, Dave, and this action that we had after COVID and the big repricing of the 10-year, this action here, a lot of markets made hay with just a really minor pullback in price, and look how we corrected more in time than price. We didn't pull all the way back here, anything here, and this looks like it could last week could have been an important reversal candle. To me, it looks like rates are headed up to 2%, regardless of what the Fed does. What do you think?
Exactly. My forecast, as I think, at 175, I mean, at
Right here.
175, I
Yeah.
called 120 on the 10-year.
Okay,
And
close.
I was ridiculed left and right
Right.
for saying there's no way we can get back to 120. Are you crazy? Look at inflation. Look at what the Fed's being forced to do. What are you smoking? And I'd say, no, everybody's on one side of the boat, and, they're going to have to reposition, because it's, we moved from a 0.6% 10-year to a 175 in a matter of months.
Yeah, they said that this was the most rapid increase in rates. I forgot the terminology they used, but this was historic, the repricing of the rates after COVID.
Yep. And if you look at your chart there, basically it's an inverted head and shoulder. So I believe we're going to 2.5%. And I think we'll be there before the end of the year, or close to the end of the year. Okay. And I think your statement was correct. They'll get there with or without the Fed's help. Whether the Fed tapers or tightens, we're going to see 2.5%. And I think that is also a big misunderstanding on the street. Is investors think the Fed has to raise rates, or the Fed controls rates. You and I know the market controls rates. So I think
the bond vigilantes have been resurrected. The Fed didn't do this.
No. Yeah, exactly. Yep. Okay. And so I think what this is predicting, in my opinion, if I see what I see, it's predicting, if this is an inverted head and shoulder, it's predicting that inflation is going to reaccelerate here, and that as we move through the next 5 months, I think the narrative is going to switch from, inflation's peaked. They're looking at lumber coming down from 1,700 to 500, et cetera. They're going to switch from, hey, I think inflation has peaked, and maybe it was somewhat transitory, to, oh my goodness. And more importantly, I think the Fed is going to switch to this. Oh my goodness, inflation is breaking out even higher and accelerating. So I think what we're going to run into come fall is the need to move swiftly through tapering into tightening. Now, whether it happens before the end of the year or whether they tighten in the first quarter, it really doesn't matter to me. I just think the risk is that it happens faster than anybody on the street is expecting. And so
we're only another less than 10% away from your target in S&Ps.
I did
your
raise
primary target, right?
Yeah, I did raise my target to 5,000 in July.
Oh, okay.
And I raised my NASDAQ target to 18,000, my Dow target to 40,000.
Wow.
And I still think we could exceed those. I'm pretty comfortable with those targets, but they, as I always say, those are my kind of, they're what I expect, but they're also, I'm not fearful that we're not going to reach them. So those are, what are we talking? Maybe 15 to 20%, depending on the index from here. Right. That'd be a hell of a run if it's there by October. And that's kind of my time frame, is I think the next, 2 to 3 months is where I think we're going to see the highs in the stock market. And then, of course, stock market leads the economy. So, out from there is when I think the economy starts rolling over. And what I see here is everybody's, and particularly technicians, are paying attention to the fact that things have rolled over and have broken, some support levels, or broken, 50 days or what have you. I see it as all, we've had a rolling correction all year.
Yeah.
And I see this as nothing more than kind of reacting to the narrative. Yes, the opening up economy, the economy opening up stocks, corrected for the last few months. The FANGs and the
Yes.
growth stocks corrected prior to that. I
Right.
think they're both set up for what I think is going to be a rip roaring next 3 months. I still think we end this cycle, what I call a 39-year bull market cycle. We end it in a melt up, meaning we will go parabolic, and we, depending on the length of your chart, you can see parabolics already, from the March 2020 level. But I think we even steepen that curve further here and basically go vertical in the last couple months.
Okay, I know that also part of the scenario is a weaker dollar. That's, a weaker dollar is kind of a tailwind for the market and risk, and commodities and some of the things you're looking for. I know every good technician, forecaster, trader kind of has a line in the sand of where their forecasts might become invalid. Is there anything, any level in the dollar, if it attained on the upside, that would negate your looking for 85 and then 120? I know that's a jiggle you're looking for, is that we peak in here, trade down 85. That's when gold and silver makes its move and we have a melt up in the market. And then from 85, we have a liquidity crisis and the dollar becomes king again. So
I don't, being a contrarian, I kind of live in an alternative universe in terms of, I'm not one that gets more, that allows when momentum's going against me, it's not what triggers me. So everybody's saying, well, what level will you turn more bearish on gold, or what level will you turn more bullish on the dollar? That's not how I work, because I'm more paying attention to sentiment and positioning, etc. And to me, the dollar can move up further here, but I think by and large we've corrected the oversold condition that was in the dollar several months ago. And now you've got the street much more attuned to the people that are on the defensive trying to argue the case are people like me saying the dollar is bearish. A few months ago, everybody was with me. Now they're not.
Right.
Now they're looking at the dollar moving up, and probably more importantly, the euro, or at least more clearly, I'm saying 130 on the euro versus the dollar, and they agreed with that when it was up over 120. Now that it's down to 117 and change, people and broken below some other levels. People are more skeptical of that, but I think that's what we're looking at still. I haven't changed my tune there, and obviously, if I'm right, it's going to certainly help gold and silver.
So Dave, I have a question that I ask myself sometimes. So, if I could ask myself, I believe I could ask you. And you talk about, people, right now on Twitter, asking you about silver, like, you have control over the markets. You ever ask yourself, why the heck do we do this, and share our views with the public, when you're right? Sometimes they'll acknowledge it, but they're all over you if you're wrong, and maybe not wrong, but just your timing is off. Do you ever ask yourself, what the hell are you doing?
Not really, because having been I should, but having been a contrarian for 48 years, I've been here so many times, and what they don't realize is they're
your indicators.
They're my indicators. I mean, somebody yesterday on Twitter, and I'm paraphrasing, I think it wasn't quite this strong, but it was kind of like, uh, when I see a lot of people tweeting David saying he's an idiot, I know we're close on the turn for the precious metals. So it's, it's exactly true, is that people are, as I learned long ago, I'd say probably 30 years ago, I started saying this, the most powerful emotion in the universe is the
Fear.
greed and fear emotion.
Yeah.
And people, people get really caught up in momentum. And when the momentum's going one way, they can only see it that way. They can't understand it. And when it's going against them, they get really angry. I mean, it's like, yeah, you're supposed to control this. What are you doing? And I can't tell you how many times I say I'm a strategist. All I do is forecast. You have to make your own decisions on investing. Yeah. I can't advise. And yet, obviously I've had a pretty good track record here in the last couple of years. So people are paying attention to me, but I can't control the market.
Yeah. So I'm wondering, I don't recall from the last interview, does crypto have a place in your scenario and narrative that you're talking about now?
Not at all. I always say I
you're
don't
like
follow
me.
it. It doesn't
you can't
mean I'm
wrap
not
your head
aware
around
of
it.
Pardon me?
Huh?
What'd you say?
Yeah. Are you like me? You can't wrap your head around the new asset class. So
yeah, to me, it's too new. I don't have enough history. As I say, let me see how it acts in the bust. When we go through a bust, let's see what it does, because it hasn't been tested in that kind of way before. And the other thing that bothers me about crypto, as I say, I don't follow it. It doesn't mean I don't have an opinion on it, or it doesn't mean I don't see it. But the probably the thing that really keeps me away from it right now is it is to a certain component of the institutional side what mem stocks are to the retail side. It's all momentum. Yeah. It's all, these guys think they have the answers, and there's no answers. I mean, it's so new. So, I could just easily, and you could too, on a chart, come up with a 15,000 number for Bitcoin as a 60,000 number for Bitcoin, right? I mean, I just can't. And I see technicians, good technicians, now, it's one of their lead things now, and I go, good luck. I think you can chart it, certainly.
Yeah,
but
it's very reactive. They like the volatility. Yeah.
And from a longer term standpoint, the other thing that concerns me is a lot of those that I say are the so-called institutional side of crypto. They're there because they're in that component of people who are really on the Austrian side. They think that central banks are, public enemy
evil.
Number one, and they hate
Jekyll
government
control.
Yeah. So it's like they want something that's outside of the central banking system. And they think, and they're also in, some of them anyway, many of them are in that reset category that think in the next couple of years we're gonna cleanse the system and reset with a new currency and all that. And
the Great Reset.
As I say, that can happen in the 2030s. That's not happening in this decade, or at least not in the next 5 years.
Okay, because I think there was a story that the IMF made some type of huge, came out with some huge SDR package yesterday. And that's what some people are linking to the gold flash crash, silver flash crash.
Yeah, I mean, the mentality is there to believe that. I don't. I mean, I think it will be a long time coming. It's coming. I mean, it's not because I think the dollar is, surviving everything forever. But I think in the next 5 years, even if you set up a system, you're not going to do wholesale changes in our system for many years. You might experiment at the edges, but the dollar is still going to be the primary reserve currency at least until mid-decade, I think, and probably beyond that.
And Dave, people mainly follow you on Twitter. That's a place they could, grill you when something short term isn't happening. or praise you when you get to your targets. At David H. Contrarian, correct?
No, it's actually at Dave H. Contrarian.
Here it is, Dave H. Contrarian, right here, people. Okay,
Yep.
and there's
I
Dave.
do write a quarterly letter by subscription, so people
Okay.
can direct message me on Twitter if they want information about that.
Okay, Dave. All right. Well, I appreciate you coming back and updating us with some new targets. And remember this: the cream always rises to the top.
Yeah, let's hope I'm cream.
Yeah, that's what I mean. Okay. So, and I'm glad you have thick skin.
Yeah, no problem. Yeah, it's
all right, buddy.
With the territory. Hey,
I'm rooting for you.
Yeah,
okay,
thanks.
so I appreciate you coming here and sharing your ideas with our community, Dave.
Sure,
Thank you very
welcome.
much.
Take care.
All right, buddy. All right, everyone. That's kind of a wrap here. For Turnaround Tuesday, Dave Hunter. You can follow him on Twitter, and he's looking for 5,000 S&Ps, and that's I think by this fall or winter before the Fed moves. So we'll see what happens. That'd be one hell of a melt up. And that's a wrap. I hope everyone has a great day. Remember to join the team in 20 minutes on the Morning Edge and send me some chicken soup so I could get over whatever I have. Anyway, have a great day trading, everyone. And don't just count your pips, count your blessings. Health is one of them. Take care of yourself out there. And we'll see everyone tomorrow. Adios. Thank you, Tim. See you, Monica, Alexander.